Hi, you're listening to the Love and Money podcast with Shakira. Today I'm going to talk about the stock market and what's going on with the stock market. As you know, it's been in red this month, the month of September, which is pretty much normal for the month of September. The stock market goes in patterns. Even though this has not been a normal year with the coronavirus, it is normal for stocks to fall in the month of September. So if you've noticed, it's been all red. If you've been looking at the stock market, um, whatever platform you're using, there are a whole bunch of different platforms that you can be using to get into the stock market. So I'm just going to briefly talk about why stocks are falling right now. So number one, the reason is inflation. And as I mentioned before, inflation means an increase in price. So the climate change that is occurring has caused some crops to be ruined as it pertains to the food that we grow out of the ground. So as a result of that, we're going to getting higher prices, paying higher prices for our food. So inflation is occurring, and that is impacting the stock market. Number two is natural gas. Natural gas prices are increasing, and so that is negatively impacting the stock market. So we have inflation, and we also have rising prices in as far as natural gas goes. A disruption in the supply chain is another reason. Because of the pandemic, the supply chain has been disrupted as far as cargo getting from one place to another. Um, like I had said before, we get some of our products from China, and that's been disrupted. So, a disruption in the supply chain has impacted the stock market. So, we have inflation, we have increased price of natural gas, then we have disruption of the supply chain. Another reason is the coronavirus. As a result of the coronavirus, people have not been wanting to go to work. And so that has been negatively impacting the stock market. And then there is also the uncertainty with the new infrastructure bill. Anytime there is uncertainty in the media, that means less people tend to put their money into the stock market. And so if there's less money going into the stock market, then it's going to be lower as opposed to when people are certain. And when people are feeling good and brave, then they tend to put more money into the stock market, and that rises, that causes it to rise. So it depends on how many people are in it, whether it is low or whether it is high. So that is another factor impacting the stock market. So we have inflation, we have the increase in price of natural gas, the disruption of the supply chain, we have the coronavirus, the uncertainty in the infrastructure bill, and then the semiconductor shortage, meaning the chip shortage that is going on. So that is also impacting the stock market. So it's mainly six different factors that are going on at the same time, which is negatively impacting the stock market. Now, people who are investors who've been investing for long periods of time, they actually like when the stock market goes red because what that means is they can buy their shares of stock at a lower price. So when they see it when they see it going red, when they see it falling, some people tend to put more money in because you are buying more shares of stock for a lower price. So experienced investors, they like it. They actually like it when the market goes down. Whereas other people would see that as a bad thing and they would start to panic and panic sell. Experienced investors, when they see the market going down, when they see it in red, they actually like that because they're getting more for their money. It's on sale now. They see that as being on sale. So, say for example, you bought. Just going to give you an example. Say for example, you bought one share of stock that was. I'm just going to make something up. Say for example, you bought one share of stock that was cost $50 in January. Okay, and say so we're in the month of September now, and instead of that stock being $50, the stock market is not going. The stock market is not doing well right now, so it's all red. So that $50 is down to $25. So an experienced investor would see that, and they would see it as I'm able to buy something for half the price I would normally be able to buy it at. So they see that as a good thing. Whereas an inexperienced investor would start to panic and think about selling. So, just to remind you, the month of September is all red. It's normal for it to be red in September. There are a whole bunch of different factors going on simultaneously, causing it to be in red. And then experienced investors, they see this, they like this, and they consider this a sale. You're getting things on sale right now. Eventually, that price will go back up, and you would have bought more, you would have been able to get more for your money because it's currently down right now. And eventually, it will go back up. And so I had mentioned before how the stock market goes in cycles. It goes down and then up, down, up, down, up. But the trend is that even though it will go down, it will go back up. And the trend is that it goes up higher than it was initially. So say the stock market is down here right now at 20. And then say it goes up to 50. So say it goes down to 10 this year. Next year it's up at 25. So after like 10 years, even though it goes through these cycles, down, up, down, up, down, up. What if it goes all the way down here? It's going to go back up, down, up. The trend line is that with all this cycling, that over the period of time, the trend is up. That's how the stock market works. Um, yeah, I don't have a graph to show you, so this is my graph. So that's the stock market for you. That's what's going on with the stock market. The month of September, all red. Experienced investors like this, and they see that things are on sale. So this is the Love of Money podcast with Shakira. If you like this podcast, please share it with one other person. And please hit the like and subscribe button. It helps the algorithm. Thank you for listening.